Welcome to the Trading Lounge, and here we're looking at the S&P 500, and the wave 4 that we've been looking for came in rather sharply, but it's in place. So we'll be looking for wave 5 to take us higher through here, and sort of looking at the sort of 1600 mark here. On the cash market, the old high for the S&P 500, I think it was 1576. So I'll just have a quick squizzy back here. This is the daily chart here, the long-term picture here, the dates here, just to bring you in the picture a little bit. So this high here, I think it was 1576 there, which was the highest point there. So this one here was a little bit lower, and as we sort of mentioned before, we were looking for a bit of a break above that through there. So yeah, that's what we're looking for. Once this is in place here, then we'll see a move to the downside. Well, much lower than that actually, but there you go. So in this little structure here, we're just looking at up for 1, back for 2, up for 3, back for 4, and up for 5. And in that 5-wave structure there, we'll be looking for 5 waves. And that's what we're looking for there. So we've got our 1 and 2 in place already, and then the 3rd wave up through here. This is a daily chart. I haven't updated it yet from yesterday, so it fell out of bed, which will be that wave 4 here, and then the wave 5 up through here. So we'll be looking for another little 5-wave structure within this one here in terms of splitting hairs, so to speak. So yeah, that's what we're sort of looking for. Coming up into this area though, once we're above the midpoint, the 1550, go back to the other chart, the 1550 here, then we've got the resistance here of 665.72 and the 80 through here, so that will become apparent there. This little move up through here, we'll look at this being in 5 waves in terms of the 1, the 2, the 3, the 4, and the 5. So up at the 1560, then we'll see a 3-wave counter trend coming back, and then we'll look for further upside there. But of course, this is covering the gap here, and this move up here, this trend up through here, will need to be retesting back into here somewhere before there's further upside there. If it gets trapped under the 1550, well, then it's got a sort of bearish bias in it. But we can count an ABC correction from this here, an A and a B and a C here. So it does hold as a 3-wave correction, but with 3-wave corrections, we can still count this as an A wave, a B wave, and then 5 for the C wave, and then moving up as well. So there's a little bit to play out through here. That's why the retest of the 1550s are important. And it's the same for the Dow Jones as well. I've got this on a 30-minute chart here just to sort of point out a bit more detail here. But the A wave, the B and the C wave coming through here. But as you can see, coming up through here, I've counted it as an impulse wave in terms of the 1, the 2, the 3, the 4 will play out through here, the 5, that will make wave 1, and then we'll have an A, B, C back for 2. So if we get this impulse wave here in 5 waves, then we can be assured of getting the next 5 in through there as well to the upside. So we can be looking at longer trades in the Australian market, in the robo trading. This is just the European markets here. This is the DAX here, and it's working itself across 8,000 here, which is a major trading level. The same as Australia at 5,000 as well. They're big numbers, and the market's not going to let them go that easy. When we're looking at the American market, the Dow Jones is at 14,500, which is just a minor level. Yes, 500 is strong. But you'll find that these markets that are working around larger numbers will tend to hold them much more through there. And this is the same for the FTSE as well, at a medium level here at 6,500 here. So it's likely to see a larger correction unfold here. And, you know, we were expecting them, and there they are, and they'll continue to increase in their swings and so forth. So if you're trading these markets, choose shorter time frames and just trade the sub levels within that as well. The Australian market here, it's also produced three waves here now. So this move down here counts quite well as a three-wave ABC for an A wave. We were looking at this yesterday being possibly two things we could have seen in here, an A and a B and a C, or we could have counted it as 1 and 2 and 3 and back for 4, and looking for one more fifth wave up through here, but we didn't get that fifth wave. So if we got that 5-wave structure, then we would have had 3 back and further to the upside, but that's the way that it unfolded. But what we do have is the A, the B and the C here, and this is in 5 waves here now. So we can look for this to move up further now, but we do need to see an impulse wave through here, and we don't have that so far, so that's more of a corrective wave here. So all I can say at this stage is that, we are at 5,000, so, the market is going to be, even when we look at this, when we look at the Australian market here, it's as it's moved up through here, all the runs have been quite small, hasn't it? But you can see that it's getting quite emotional here over the last 2 weeks. We've had these large moves here of 1% each time here, and it's been very sort of tricky for us. That's why we haven't been putting out many trades, and the leads from the US haven't been that that high. So we do need to sort of just trade less and look at shorter time frames for all of this, because it is emotional here and it is at the 5,000. Excuse me. And I can just see this continuing really. So it hasn't settled. It's in its mode there. We looked at this. We're getting overlapping wave structures. This low into this one, and this one into this one. So this is corrective through here. It's either an ending triangle or it's a B wave where we've got an A and a B and a C coming down through here. But this is counting as 3 waves down here so far, but it can turn into 5 waves. It can turn into down for 1, back for 2, down for 3, 4 and 5. It can get bigger. Normally the distance above the level that it goes is normally an indication of how far it will drop below as well. So we need to be mindful of that. Also with these two, when we're using the minor trading levels, we normally work in with the 4-8 here. So any swings in this market would be looking at the 4-8. And also too, in the bigger picture, finding support on 5,300 separates the market psychologically from the 5,000. So you can still see that we've really just sort of arrived here, because when we arrive here, there's only 2 things that can happen. There's the overshoot pattern, which this is, creating the first high above the level, and then it will start to swing across it as such and then settle into that number. The other one is where it has the arrival here, the reaction from here in 3 waves, then has the first high above the level, and then has an A, B and C across here. So it's still unfolding through here. In the bigger picture, we're still looking at this as a 3rd wave in here, the 1, the 2, the 3. So it is like a big 4th wave that's unfolding through here before we see any upside here. The 5,400 is the 61.8 retracement level from the from this bear market through here. And also too, you can see that the 5,000 is the balance line for this correction that's unfolding through here. So it's still got more to go, and we'll be looking at this as an A wave down to here, an A and a B and a C wave up to here as a larger B wave, and then a C wave coming down through here as well. So there's more to go through there. CBA is kind of leading the way in all of this, so it can move higher. If we have a look at just have a look at CBA here, just to have a look at the possibilities through here. I don't want to take up too much time, but I'll just see if I can. I was going to count this out, but I did do it this morning, so I'll just see if I can find that file that I had here. Just bear with me. Okay, I've got it here. This is a little bit rough here, but just looking at the possibility of CBA moving much higher, and I'm sort of quite happy with that too, because I know that from using the levels when we're looking at a market that's done its thing at $50 at trading level 5 here, where it's come up and eventually found support on here, had its correction, and then moving up from that point there. So we're looking at this here. This is intermediate wave 1, intermediate wave 2 here, and intermediate wave 3 finishes up here, 4 here, and then 5 up through here. So if you want this I can send you the file over and in an email, and you can just load it straight into this charting program, which you can download off the website anyway. But so this is the sort of count that we're looking at, up for 1, an A and a B and a C for 2 here, and then minor degree, which would be up for the 1 and back for the 2. And that minor degree would have 5 waves in it. So next smaller waves would be the 1, the 2 in there. And then there would be 5 waves in this one and 5 waves in this one. So that's minor wave 3 here. So we're looking at 72 there. So 72 is an important number, and that will play out through there, and so will be the 80 there. So really what we'll be seeing as we see our market vibrating across the 5,000, we'll see CBA here, our leading stock here, pretty much sort of playing, here it was playing a series of waves 1s and 2s at the beginning of a trend, and then we've had our strong sort of third wave up here, which is still continuing, but it's in its later stages of its third wave. You know what I mean? So it's got a series of like thirds and fourths waves in through here. So yeah, but anyway, I can send that file over if you wanted it, and you can just load it straight in. Okay, just moving on a little bit, let's have a look at the commodities, as we've seen copper falling out of bed. Okay, we've got copper here on a 4-hour chart, and we were looking for wave 4 to unfold across the midpoint here, the 350. There's a couple of ways we could have countered this. We could have also had the wave 3 over here, the wave 5 and the 3 over to here. It does not that it really matters that much at this stage, but we understood that this was all corrective, and once complete would move to the downside. So you can see it's moved to the downside now. We've got, if I just put this on a smaller chart now, see, I've just put wave 3 here on this chart here, and just looking at the different options we had through here, but we understood that it was corrective, and a wave 4, once it's finished, it'll be moving to the downside. So we're looking at wave 1 here now, wave 2 here. Obviously the third wave makes the wave count correct, and looking down for wave 3 here, which would be around the 340 once that's complete. What we've seen here at the 350, we'll get a smaller version of that at the 340, and then we'll move down. Now, the important point about this is that it influences the Australian dollar, and it also influences the materials sector, the base metals as such. Nickel's pretty much the same, and aluminium and zinc and lead and so forth. So yeah, it's all that we just use this as a central sort of theme through the base metals. So anyway, that's all unfolding according to plan. We'll be seeing BHP testing this is last night, BHP in the US is testing 72 here. We should see a bounce shortly, because this is like a little wave. Not that we can count that really clearly in through here, but I can sort of see this is a little wave 4 in through here, and it is slowing down, but we'll still need copper to finish its little 5-wave move to the downside, just below the 340. Yeah, so 340, 330 before we see that sort of bounce and support come in through there as well. Right, the oil market is still working its rally, and until the 92 here is the the resistance here, then we can't short oil. So we need that. This is group medium level here, then group 1, 1, 2, and 3. We need the pivot, the 92. We need that as a retested resistance before we can look at shorting there. It obviously is a retest of the closest largest number, which is 95. All we need to see here is 5 waves up from this little structure through here, taking this high out here for this wave 5 of C and 4 to be complete there. So let's just allow that to unfold, and let's see how that goes. So we're looking for it to fail support on the 93 there. That would be 93 as a retested resistance, would be the first sign of weakness. And you could probably short that as well, but it's higher risk, so because you're moving against this trend here. So that's why the 92 would be the important point there. The gold market's pretty much the same as well, but I was looking at this morning, and we're looking for a C wave coming up in gold here, and it's kind of complete now because we've got the wave 1, the wave 2, 5 waves in here for wave 3, and ABC for 4, even though there's overlapping wave structure there. We'll just work with that. And then the wave 5 up here, the 1, the 2, the 3, the 4, and the 5 little waves to finish that 5th wave here of C or 4. So I think that if there's going to be a top in, then this would be it here. We need confirmation on that. Confirmation would be an impulse wave to the downside and eventually finding the 1600 as resistance. So a failed retest here would be the short trade setup, so you could catch it at 1590 if that was going to be the case. If I'm wrong here and we get an A and a B and a C cross here and then finding support and then moving up, then we've got a bigger picture that we need to look at through here. But as it stands, we're looking for that to play out through here as this wave 4 here. So we're still working in the triangle here. So that wave C here, so that would be the A, B, and C, and the completion of it here. Or we're going to get the triangle, the D, and the E, and then further down. But basically what we want to see here is we want to see this struggle up complete itself and find that 1600 as the resistance, and then we'll have that one more trend to the downside. Right, let's have a look at FX. Okay, look, starting with the US dollar here on the 4-hour chart, we're looking, as you know, we're looking for this top to play out through here, and then we're looking for an A and a B and a C correction to play out through here before we see any further upside, and that can be the case. The euro's made a new low, but the dollar hasn't made a new high, so I think that's sort of interesting within itself in terms of supporting a corrective pattern across here. However, the 83 is a top of minor group 1, so support on top of this minor level through here would certainly create further upside through there. So let's just allow this to play out through here and see what we've got. And because we've had these sharp moves here, it's a little bit tricky to count the empty space in there as a structure at this stage. So let's just allow this to play out here, but this is kind of what we're expecting here. But support back up here on 83 certainly sends it to the upside, and then we would have to look at this being the corrective move here, but we're still expecting a much larger move through here. So let's just allow that to unfold a little bit. The euro, we've just sort of adjusted the wave count a little bit in terms of looking at this particular correction through here as a flat correction through here, and still looking for wave 1 to the downside, and this has actually still got more to come down through here as well, in fact. So this is like a little 5-wave structure in through here, so we could even just label that as a little wave 1 in here, and an ABC back for wave 2 in here, and then looking at wave 3 lower in here as well through here. So still further to move to the downside through here. So yeah, so So that means that you can pretty much look for a short position through here. And the good side of this as well is that the it's testing 130 here. So every time you get to this, perhaps maybe the 129 as retested resistance would get you down further through there. So yes, we're still looking for the low of wave 1 down here, and also the A and the B and the C for wave 2. And that we thought we were on track here, but this gap has just changed the wave count slightly, but yeah. So, but anyway, there you go. So a possible short from this ABC correction through here. Just if you're down here, you just need to use the 129 there. The Australian dollar. We know that copper has moved down further, so there's going to be some sort of influence there. As you know, we were looking for or counting this 5-wave structure to the upside, and we've got this little 5 waves here for wave 1 and wave 2 here, and then we're looking for wave 3 up through here, which would be the 1, the 2, the 3, the 4 and the 5 up through to here. Now this gap does make it a little bit difficult through here. I had this as the wave 4 here, and then the wave 5 up through here, finishing a little sort of further up through here. And that could be the case because I can only see sort of oh no, there's 5 waves there, so we'll have a little pullback through here and then further up there. So we have to include this as the larger wave 4 here, and then the wave 5 up through here. However, all that said and done, it is a little bit tricky here to give you a very positive, clean count on it. So we could say that allow it space in here to do its thing between group 2 and 104, and if support is found on 104, well, then you can go along from that point and build a trade in through this way. If the 72 in here, if this group 2 here becomes the retested resistance in here, then you'll know that we've got a possible top in here, and we may be following base metals lower through here. We know that it's getting tight as it's moving up through here because we can see all these it's slower through here. It's reasonably fast through here. It had a news event here, but now it's it's really slugging it out through here. So it is it's got that sentiment of slowing down. That said, use the 104 as support for the long side, and this for resistance through here. Now normally if this finds resistance through here as well, we normally find that this trend line becomes the resistance. So if it does break down through here, it's likely to test it back up, test it back here before you see it fail to the downside. So it's always good to leave the trend line in once it breaks it, to see what the retest would look like and where it would look like as well. So something, some sort of retest at that point, because it would be down for 1 and back for 2 at that stage. So allowing it time and then using the levels through there to pick up that short there. If that's not the case, then we've got a little 5-wave structure that will take us up to 104 or 104.72 up through there. So, and that would be in line with the S&P 500 as well. So just see which way that's going to go, if it's going to follow the base metals or the S&P 500. But even the S&P 500 needs to get above its old high there, so 1560. It needs to find support on that. Otherwise, it's likely to go back to the 1550 and retest that. So the 1550 as tested support or tested resistance will give you the next direction in the market there. And of course, the other indices will follow that. So allow the retest of the 1550 to play out and see if that becomes the support or the resistance, and then you can take your direction from that. Alrighty, well, good morning and good luck.